today, lending and retail both on the up. Hello again, it's Martin North from Digital Finance Analytics. Welcome to this post covering finance and property news with a distinctively Australian flavour. Well, it's the last day of February today, and that means that we can look at our Stats Fest, which essentially is the latest data from the RBA, from the ABS, and also, of course, from APRA. So we'll start with the financial aggregates from the Reserve Bank, which of course is the total amount of credit sitting with the bank relating to housing, personal lending and business. Credit was up 0.6%, housing was up 0.7%, personal credit was down a little 0.6%, and business was up 0.6%, and broad money was very little changed. And if we look at the annualised figures in 2022, credit was up 7.6% compared with 1.7% a year ago. Housing credit was up 7.7% compared with 3.6% a year ago. Personal credit was down 3.8% compared with 12.4% down a year ago. And business credit was up 9% compared with 0.4% a year ago. And the broad money was 8.9% higher compared with 12.8% last year. So if we then look at the statistics in more detail, these are the monthly numbers. We can see that housing in the month rose 0.67%. That includes owner-occupied loans at 0.8%, investing loans at 0.41%, and personal credit was down 0.61%, and business credit was up 0.62%. Now, these, of course, are very noisy numbers, but we get the general trend. And if we then look at the credit aggregates overall, all credit was up 0.61%, which was lower than last month, and broad money was 0.1%. If we then look at the annualised numbers, which takes out some of the lumps and bumps, housing credit was up 7.66% over the last year. Owner occupation was 9.82%, which is extremely strong. Investment credit was up 3.68%, which continues to rise. Personal credit was down 3.8%, so we're still not seeing significant momentum there in net terms. But of course, a lot of that will be explained by people borrowing for Christmas and then paying off in January. And investment for business was up 9.02% in terms of credit, which is a very strong number again. If we then also look at the annual aggregates, all credit was up 7.56% and broad money was up 8.94% from a year ago. If we then turn to the APRA statistics, which relates to the banks, this gives a total view of the credit held by the banks. And the monthly occupation was up 0.72% this last month, but was down compared with last month. Same for investment lending, up 0.36%, so a little down from last month. And total credit was 0.6%, so a little down, but still growing, of course. And now, if we look at the total stock of loans, the total of owner-occupied and investment loans is sitting at 1.942 trillion. That's a record. Within that, we can see that investment lending is growing more slowly. It now comprises of 33.99%. So we're still seeing more owner-occupied loans than investment loans. We can also just look then at the selected portfolio movements. I've sorted them by owner-occupied loan growth, and you can see there that Commonwealth and Westpac and NAB and Macquarie are at the top. It's worth noting that ANZ is down the bottom because its owner-occupied loan pool dropped, although they did lend more investments. It's also interesting to note that the most significant investment lending came from Commonwealth, Macquarie and ANZ, while Westpac took theirs lower. So you can certainly see here some diverse strategies amongst the various lenders, but there is still significant growth in the system. Not surprising given the low interest rates, although of course as interest rates rise and uncertainty rises also, we may well see this ease off now as we go ahead. We'll have to wait and see. Now, we also got today the retail trade statistics, And they also make quite interesting reading, insofar that these are the first indications of what's happening. There'll be some more detailed updates on the 4th of March. And in fact, the ABS said that the Australian retail turnover rose 1.8% in January 2022. That's seasonally adjusted, according to the retail trade figures released by the ABS today. The January result follows a fall of 4.4% in December, after consecutive rises of 7.3% and 4.9% in October. The ABS said that the 1.8% rise continued to show strength in the post-Delta lockdown retail recovery, with sales at the second highest level in the series. The emergence of the Omicron variant and the rising COVID-19 case numbers, combined with an absence of mandated lockdowns, has resulted in a range of different consumer behaviours. We've seen the type of spending previously associated with lockdowns occurring simultaneously with those associated with easing lockdown conditions, they said. This has led to variations across the industry, with food retailing recording a rise in sales consistent with previous COVID-19 outbreaks as consumers exercised caution amid surging case numbers, but the absence of lockdowns meant that other discretionary industries, which would usually see a fall during the pandemic, have recorded mixed results. Food retailing had the largest sale rise this month, up 2.2%, which is the largest monthly rise since July 2021, with sales remaining elevated at their fourth highest level in the series. This went alongside a 0.8% fall in cafes, restaurants and takeaway food services, as some consumers opted to stay home. Other industries which saw rises this month included other retailing at 4.5%, department stores at 4.9%, and household goods retailing at 0.6%, while clothing, footwear and personal accessories retailing fell 1% as the only other industry to fall. With tightening restrictions favoured over lockdowns during the latest COVID-19 wave, sales across the states and territories all rose this month, with Victoria up 2.5%, experiencing the largest rise, followed by Western Australia 4.7%, New South Wales at 1%, South Australia at 3.1% and Queensland at 0.4%. So what you can see here is that the statistics continue to show some momentum within the economy, which is very interesting. I should be fascinated to see how this plays out in the weeks and months ahead, with consumer confidence ebbing away, higher interest rates still being spoken about, and of course the fallout from the conflict in Ukraine now also playing into the picture. We are, I think, at a very interesting time, so I'll report the statistics again next month and see where we go from there. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.